Did you ever have a trade that was running in some very good profits, but you decided to close it and then the trade continued to run for a very long time in your profit zone, so you missed out on all that profit potential? That is exactly what we will be speaking about in this video. How to avoid those kind of situations. So how to capitalize on the full move. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, so first of all, let's speak about the major question that we have today. How to avoid closing your trades early, and then let's make a full breakdown on AUD and ZD, which is a very interesting pair to follow at the moment. So make sure you stick to the video until the end, because we will also see how we can be looking for a capitalizing opportunity on this pair. But first, let's answer the major question: how to avoid closing your trades early. Well, to do this, the way is very simple, okay? The steps that you have to follow to avoid ever again closing your trades too early is very simple. You need to know exactly how you're going to manage a position, okay? You don't only need a complete set of rules before taking the trade, so how you will take the trade, when you will take it, where you will take it, where is your stop loss, where is your take profit, but also you need a clear set of rules on how you will manage the position. So for example, for us, that is how we manage a position and how we avoid ever having emotions step in the game and closing our trades early. Once we enter a position, what do? We just continue to run the trade until our entry is protected by new structure. Then at that point, we go risk free on the position and we wait for the trade to hit our profit target for a minimum 1 to 3 risk to reward. Now, what does it mean that we wait for our entry to be protected by structure? Let's say that we take a buy order from here. Okay, let's say that we buy from here, a stop loss is below the low. The market makes a huge move to the upside, but it doesn't necessarily have to be huge. If the market breaks above this high, then our trade is perfectly fine to ride our trade risk free, meaning that we will move our stop loss a couple of pips in profit just to cover the commission, because at that point, once the market has created a higher high, our entry is protected by this new structure here, okay, which is the new support. So if the market will break it to the downside, we want to exit the position break even, because the market has high probabilities of continuing to the downside. So once we go risk free on the position, we just keep our profit target wherever it is, and we just continue to run the trade until the market will reach the target, okay? We don't even check the charts. The best advice that I can give you is create a rule-based strategy with rules not only for when you will take the trade and which conditions need to be satisfied in order for you to take the trade, but also with clear trade management rules. Once you have that and it's tested and it works, just follow it, okay? Why don't we trail our stop loss? Why don't we use trailing stops? Why don't we use multiple take profit levels? Because we have tested and trading it in this way, trading our strategies in this way has proven to be the most profitable. So that is exactly what we do. So now that we spoke about how you can avoid closing your trades early to then just see the market go to your take profit, let's make a full breakdown on the situation that we currently have on AUD and ZD. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. So let's start from the monthly time frame. Now on the monthly, what we can see, we can clearly see that we have a market that has rejected a major support area. We had very strong support here, again turned support here, and again the market rejected this zone to the upside. Not only it rejected its zone, but it also created an important pattern. In fact, what you can see here is that the market went down, up, went to test this extremely strong support that has preceded all this huge move to the upside, this huge move to the upside. And obviously it has rejected this huge zone here. The market has also created this W formation in rejecting this zone. Now, if you have a W formation in the market, what do you expect? Specifically, a bearish W formation. You want to see the market show a retracement back to the neckline, meaning that basically we expect a wave to the downside. And in fact, that is exactly what the market has already been doing, exactly as we wanted already from the first analysis that we did on this pair. So on the monthly, we can expect more continuation to the downside, at least to reach this level here, which is exactly the previous resistance and now turn support, aka the neckline of the monthly W formation. Let's go down on the weekly and see what kind of situation we have on the weekly time frame. Now on the weekly, we can see that here we have strong support. In all this move to the upside, there is one candle which is not related to the move, which is exactly this red candle here, which is a strong demand area for this market. So from here, we expect the market to show a reaction, okay? To show a reaction to the buy orders that are here. And in fact, the market has already respected this zone here and again here. Let's go down on the daily time frame. Now on the daily time frame, that is where things get very interesting for this pair. In fact, what we can see here on the daily is that the market is currently approaching and has approached a very strong support zone, which is the same zone that we have on the weekly. It's just a little bit more precise. We had extremely strong support demand here, preceding all this huge move to the upside, against support here, and currently the market is testing again this level. Now, why is it very interesting that the market is testing this level? Because it is testing it after creating this M formation. After an M formation, what do you expect? You expect the market to make a move to the upside, to test the previous support, now turned resistance. So to complete the pattern at the neckline. So immediately, from a daily perspective, we have an upside target at the neckline. We know that we have strong support here. Now, before I show you how we can be looking for an opportunity here on AUD and ZD, let's go first and take a quick check at what we have from a COT perspective. So commitment of traders, what big banks and institutions are currently doing in the market. Now, if we check what we have from an AUD perspective, we can see that currently we went all the way up to minus 4K net positions from the massively bearish minus 54K net positions that we had here. Now, what does it mean? It means that the biggest speculators in the market, so the hedge funds, had basically way more shorts than longs. So 103K shorts and 49K longs. And now we have more or less the similar value. We have 40K shorts and 35K longs. So AUD has been getting, we have seen a clear shift to the positive side on AUD. And in fact, all AUD pairs have been moving to the upside quite aggressively. Look at, for example, what we had on a AUD USD, huge trend to the upside. Now, going back to our AUD NZD chart, if we go and see what we have here, we can also see that with the last report, they have added another 2.5K shorts, but in general, AUD has been getting stronger, and that is not very good for our overall bearish W formation that we have on the monthly. But here, we definitely want to see a reaction back to the neckline of the W formation. Let's see what we have from an NZD perspective. Now, if we go and check what we have from an NZD perspective, we can see that NZD has been getting very strong as well, going from minus 20K to having the same amount of longs and shorts from an institutional perspective, with 1.7K longs added with the last report alone. Today we have the new report coming out, but a definitely very interesting situation also on the NZD. So having a strong AUD and a strong NZD obviously has created a situation in which you had a lot of ranging. And specifically in a ranging market, you definitely want to see these formations complete. However, as usual, trading is reactive and not predictive. So just because we want to see the move to the upside doesn't mean that we can just take the long from here without proper confirmations. In fact, always remember, monthly, weekly, and daily are for direction. The 4 hours is the best time frame for entry. And when it comes to the price action that we currently have, we have a massively bearish market. So everything is pushing to the downside. And until we can see a clear shift from a bearish market to a bullish market, we will not be looking for any longs with students, because obviously if everything remains as it is right now, this market will easily break everything to the downside and we will have to adjust our new analysis. And anyway, we will just continue to follow, because this will become not an information but an overextended information. So when the market on the 4 hours will show us that it's ready to shift to the upside, at that point we will be looking for a nice long, and I will keep you guys updated here if the market will break this structure. But at the moment, as we are speaking, this is what we will be doing with students this week and probably also next week, because unless we will break to the downside or reject aggressively today, we will be monitoring price action on the 4-hour time frame inside of this area, waiting for a shift from a bearish market to a bullish market. And as soon as the market, after shifting, will provide to us one of our valid entries, at that point we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them with me each and every day. In fact, I give you the market breakdown showing you exactly how to apply these strategies with entry, stop, take profit, as well as answering every single question that you have every day. So it's a very complete program. I suggest you go and check it out. Link is in the description, or I will see you in the next video.